What if I told you a man just became a trillionaire? And almost none of it is real money. On June 12, 2026, on the very first day of trading on Nasdaq, one man's company market value shot past $2 trillion. At the IPO price, it was already $1.77 trillion. That number is so massive that if you spent $1 million every single day, it would take you more than 2,700 years to spend it all. But nobody is asking the real question. A company that lost nearly $5 billion just last year, how does it end up worth more than $2 trillion? Stay with me. This isn't just a story about one rich man. It's a story about rules being rewritten, a president, and ordinary people's retirement savings being put at risk. Let's pause for a second because your brain genuinely can't process this number properly. If you go back 1 million seconds, that's just 11 days ago. Go back 1 billion seconds, that's 32 years ago. Now go back 1 trillion seconds. That's 31,000 years ago, a time before any human as we know them today had even been born. The entire economy of only 21 countries on Earth is bigger than this one man's wealth. So the question is this wealth even real? This $1 trillion isn't sitting in a bank account. It's shares paper. By his own admission, less than 0.1% of his total wealth is actually cash. And if he tried to sell even a portion of those shares and convert them to cash, the stock price would crash. Other investors would panic and pull their money out. So ask yourself, if wealth disappears the moment you try to use it, is it really wealth at all? Or is it just a number on a screen, one that only holds up as long as everyone else keeps believing in it? In economics, there's actually a name for this, the castles in the air theory, from the famous book A Random Walk Down Wall Street. Some stock prices are based on real earnings and real profits. Others are based purely on belief, on dreams. A Harvard Business School professor once called it a financial cult, where people invest not in a product, but in a name. But dreams don't show up on a balance sheet. What happens the day people stop dreaming? Now let's look at the track record. In 2013, the Hyperloop, a promise of transportation at 600 miles per hour. A decade later, the company shut down. Nothing was ever built.
A plane?
No.
An automobile?
It's
Transporter machine?
It's a cross between a Concorde and a railgun.
In 2015, a promise of fully self-driving cars within 3 years.
Yeah, like I said, about 3 years from now, we're confident we can make a very compelling $25,000 electric vehicle that's also fully autonomous.
Tunnels under highways, promising to end traffic forever. What we actually got was a 2-kilometer tunnel in Las Vegas, where there's still traffic today. In 2014, a promise of humans on Mars within a decade. That deadline has also long passed.
Going all the way to Mars, I think. Best case 10 years, worst case 15 to 20.
So the question is, these promises keep missing their deadlines year after year. So why does the market keep pricing in every new promise as if it's almost guaranteed? This isn't just online critics talking. Well-known research firm Morningstar has said this company's actual value is only about $780 billion, less than half the IPO target valuation. Famed hedge fund manager Michael Burry, who predicted the 2008 financial crash, wrote that there's nothing in this company's filings that justifies a valuation of even $1 trillion, let alone $2 trillion. So there are two possible stories here. Either the market has correctly priced in the future, or thousands of ordinary investors are funding a fantasy. Which one do you believe? Billionaires typically don't spend their wealth. They borrow against it. It's called buy, borrow, die. Step 1. Buy shares. Don't sell them because selling means paying taxes. Step 2. Pledge the shares as collateral and take out low-interest loans from banks. You get cash in hand, but you don't owe any capital gains tax. One well-known example, shares worth more than $60 billion were pledged as collateral to secure a $12.5 billion loan. Step 3. Death. When shares pass to heirs, In many cases, the unrealized capital gains tax is never paid at all. Between 2014 and 2018, one man's wealth grew by about $13.9 billion. He paid taxes of just 3.27% on that. Meanwhile, the average American worker pays somewhere between 20 and 30%. So who's actually footing the bill for schools, hospitals, and public services? And this is where it stops being just a business story. In the 2024 election, he was one of the largest political donors, spending close to $290 million to support one candidate. In an interview, he said himself that he believed if that candidate lost, he might end up in jail.
It does seem that way. You can't just be like, yo,
Yeah, I'm like, how long do you think my prison sentence is going to be? Do you think? Will I see my children? I don't know.
The candidate won. Meanwhile, multiple ongoing investigations and lawsuits against his company also saw changes. So is this a story of business genius or a story of being extremely close to power? Now picture this wealth a different way. According to the UN World Food Program, ending world hunger by 2030 would cost about $40 billion a year. That's a tiny fraction of this one man's wealth. Oxfam's analysis suggests that a tax of just 10% could lift hundreds of millions of people out of extreme poverty. The head of the World Food Program once publicly pointed out that just $6.6 billion could save more than 40 million people from starvation. He even issued a public challenge. No response ever came. History doesn't remember people for their bank balance. It remembers what they built and what they refused to give. Don't be dazzled by the number. Look at what's underneath it. Debt, political favors, broken promises and rules, bent exactly when they needed to be. Next time a $1 trillion number flashes on your screen, just ask yourself one question. Who's really paying for it?